Hey everyone, if we're meeting for the first time, my name is Vojchehoske and welcome to the Real Estate Classroom YouTube channel. So most of you know that this time of year, real estate professionals, they're gearing up for the following year. They're getting their goals and expectations put onto paper. They're getting their plans established. And part of that is also preparing for your income and expenses and taxes and planning for all of that. About 10 years ago, I created this spreadsheet. Many of you have used it. And about every 2 years, I do some tweaks and updates, and I have a new update to the spreadsheet. Not major, but there were enough people requesting the changes that I decided to make some changes. Those changes including adding expense categories for office rent and 100% or team fees, those type of things. And I did clarify some income categories as well. All right, so in today's video, I'm going to show you how to use the real estate agent's bookkeeping spreadsheet. Now, I actually have now about 25,000 people that are using this spreadsheet, and I typically get about 15 to 1,600. In fact, last year I had 1,600 inquiries on how do I do this or do that. So I would ask you, please, if you're going to use the spreadsheet and you're not familiar with it, please watch this video completely to the end, because it's impossible for me to answer all of those questions. And as more and more people use this, it's going to really be impossible. And I found last year, out of the 15 or 1,600 inquiries that I got, almost every single question was addressed in the video. So in this video, I'm going to do step by step here, but I do want to do the outlier here of the overall explanation. This is a spreadsheet that I developed 10 years ago specifically for real estate professionals. Again, make sure you have your CPA approve its use before using it. That's my little disclaimer here. You use it at your own risk. Now, I was asked to make a couple of changes. It's been 2 years since I made any tweaks to it, but I had a lot of people asking for changes. The first change was right here in the income column. Now, we have our total income and total expenses. All right, but a lot of you wanted me to break it down into income from buyers and income from listings. And there was some confusion on how I had it, the old version titled, these categories titled. So I changed it: income from buyers, income from sellers, or listings. The other part is I added a couple of expense categories. A lot of you asked me to include a section or a category for office rent and also for team or 100% fees, because teams are so common nowadays. So I did that. And the last thing is here, please don't forget about the mileage section right here. This is really important, because we want your mileage deductions to be factored into the total estimated taxes that you owe. And the total calculations here, and I'm going to show you how to use this in a minute, but total calculations end up going up here in our total calculation. So we have our gross income minus our total expenses equal net income, which is our taxable income. But then we even mine it a little further, and we take our net income and include mileage in there, which gives us our federal estimated taxes and our state estimated taxes. Now, I want to point something out here. Our federal estimated taxes is based on 28% of your net income. All right. If you want to change that, you just change this decimal right up here in your toolbar, decimal 28. You change that to whatever you want. Same for state taxes. I have right up here in the toolbar based on decimal 0.6 or 6% of your net income. If you want to change that to something else, you can change it right here, decimal 0.6 to whatever you want. Now, if you're in a state that has no income tax, you can delete all of this right here. But most states have income tax. All right, so how do we do this? Well, I like to double and triple check things, as you know. So that's why we have so many income and expense categories. I'm going to show you how to fill this out. Also, right up here in the upper right-hand corner, we have Schedule C totals. Now, what is a Schedule C? A Schedule C is a schedule that real estate professionals, most of us, file on our income tax. And it's right here. Everything that's in red, all these expense categories in red, are what we call Schedule C expense categories. And as you can see, I have each column where in the yellow, we're going to total up each specific column. Now, the totality of all of these yellow Schedule C expense categories are going to total right here, and that's going to make sense in a minute. The other thing I would tell you real quick, any cell that you see that's in yellow, please do not mess with, because there's built-in formulas. All right. Okay, so how does this spreadsheet work step by step? So let's say that you come into the office on January 2nd, 2021, and there's a commission check of $5,000 waiting for you. You deposit it. Now look what happened. Right here in the total income column, it auto-populated or auto-added everything in this column right here, $5,000. But it also auto-populated the total gross income up here in our formula. So if you were to not sell any more real estate right now, you would owe the federal government $1,400, and you would owe state $300. So it auto-calculated your estimated taxes. All right, so we have $5,000. That was from 123 Main Street, and that was a buy-side transaction. So look what happens there. We track that. So let's say that on January 5th, we have to pay our office dues, and it's $500. That's our office rent. We just put it in the description, and then over here, this is office rent of $500. Now look what happens. Right here, it auto-populated or auto-calculated the total expenses for this column here. For this column right here, it auto-populated the total. But notice what happened up here in the in this section right here. That's our total Schedule C expenses thus far as of the 5th of January. So let's say on January 20th, we had to pay a cell phone bill of $300. We paid it to Sprint. I have a column here, $300. Now look what's happened. Right here, the total for this expense column is $800. That also reflects up here, $800. Notice right here, the total of this column is added up right here. But look at the Schedule C total up here in the upper right-hand corner. It is taken the total of our office rent plus our phone and calculated. Why is this important? Because 3 cells should always be exact. Right here, our total expenses, right here, our Schedule C, and then up here, our total expenses, all should be $800. And you always want to triple check that, because if there's a mistake somewhere, we need to correct that. All right. The same is with income. Our total income cell right here of $5,000, or that cell should always match this one up here for total gross income. All right, let's do another one. Let's say that on February 2nd, 2021, we get another commission of check for $10,000. That was for 345 Main Street, and that was a listing. All right, notice we have total income is $15,000. That auto-calculated up here for their total gross income. But look at that. We have total gross income minus our total expenses of $800 gives us a net income of $14,200. So far, we owe estimated taxes to the federal government of $3,976, and we owe the state $852. All right, let's do another one here. Let's say that on 3/15/2021, we had a $1,500 expense to the newspaper for advertising. That is an advertising expense of $1,500. Again, this column here totaled right here. Notice up here in our Schedule C totals, it's $2,300. Notice up here, $2,300. Notice our total expenses, $2,300. So we're always double and triple checking. All right, so let's say that it is now the 31st of March. Right now, we owe the federal government $3,556, and we owe the state $762. So we cut a check number 1,000 to the federal government for, let's say, $3,500. Now look what's happened here. This column has totaled up right here. We've paid the federal government so far this year in 2021 $3,500, but look what it did to our estimated taxes here. It auto-calculated that payment into it. So right now we estimate that we owe the federal government about $56. Maybe you did the same thing for state. So you made a check number 1001. We owe the state $762. So we pay the state $750. And look what happens. This auto-populates right here. It auto-calculates. But look at our estimated tax that's owed now. It's only $12. So it's factored that in as well. That's the cool thing about that. One thing I want you to bear in mind, though, when you're writing checks to the government, whether it's state or federal, for estimated taxes, we do not put them down below here. All right? It screws with the calculation. We only put them up here. That's the only place we want to put them. All right, let's do one more here. Let's say that we have one more commission. So on 4/15/2021, we had another $5,000 check. That's for 6789 Main Street, and that was another buy-side transaction. Look at what happened right here when we auto-calculated this particular column right here. Look what it did. It gave us a whole bunch of these pound signs up here. I get a lot of questions. What do I do when that happens? Well, real simple. Look at my cursor. I go up here to the column. See how it's highlighted? And right there on the edge, you just double click. See what it did there? It gave it more room, but that's a little bit too much. So what's the easiest thing to do? Well, let's go back. When this does this, you simply go up and you just move it a little bit to the right. That's all you have to do. And look what happens. It gives you more room. So that's how you correct that. But anyways, we had a new commission and now we have another expense. So let's say on 4/16/2020, we had $1,500, and that is for our membership to NAR, our state and our local association. I know that's probably a little expensive, but where are we going to put that in? Well, I personally put it in the subscription and memberships category. The thing to remember that you want to be very consistent year over year where you put your expenses. And one of the things I would do is, again, have your CPA review this and make any tweaks that he or she wants to do. Now, notice that right now, as of 4/16 or April 16, our estimated taxes, again, are back up to $1,000 on federal and state. But we haven't taken into consideration any mileage. So let's go over to our mileage column here. So this is very important. Mileage can change. The IRS estimated or allowable mileage changes all the time. So you always want to make sure that every couple of months you just do a simple Google search and just type in IRS mileage rate, and it'll give you the rate for the years and the months, because sometimes it'll change in the middle of the year. I've seen many times when gas prices fluctuate a lot that the government changes it 3 or 4 times. All right, so let's say that right now for January 2021, the going rate is 57.5 cents. So that's decimal 575. And let's say for the month of January, you drove a total of 500 miles. Now look what happened here. It auto-calculated here for the month of January, and it also auto-calculated here. But let's go over to the top left. Look what it did. It right here where it says mileage. We have gross income, $20,000, total expenses, $3,800, net income of $16,200. That's our taxable income. But then we added in or calculated in that net income, our $287.50 of mileage deductions. So that brings our taxable income down, our net taxable income, to $15,912.50, which then lowers our estimated federal tax and our estimated state tax. That's why keeping accurate mileage logs are so important. So let's do another one. February, again, the rate is 57.5 cents, and we drove 1,125 miles. Again, look at the auto calculations. But then in March, the IRS changed the rate, and it's 54.5 cents. So we put in decimal 54.5. You drove 965 miles, and it auto-calculated. So right now we have, in the first quarter of 2021, based on our example here, we have $1,460.30 30 cents that we can deduct from our net taxable income. And of course, look what happens up here in the upper left-hand corner. That is where it's reflected. That's why the mileage is so important here. And it auto-calculates or re-estimates your federal and your state estimated taxes. Last thing I want to point out real quickly, by request a couple years ago, I know many of you like to give to charity or you tithe your income or whatever. I put a spreadsheet here where you can track all of your charity that you do give. It does not, I repeat, it does not auto-calculate into here. So just remember that when you're paying your estimated taxes as well. All right, that's all I have for this video. If you would like a copy of this video, I'm going to put on the screen my email address, or please put it down in the comment section, your contact info, your email address, and I will email it. Please remember, if it's a Gmail or a Yahoo account, when I email these, they almost always go to your junk or your spam folders. So please make sure that you check those folders if you have not received it. Otherwise, I would love to know what you think about this spreadsheet. Please put something down in the comment. Let me know what you think down in the comment sections. I would appreciate it. All right, everybody, I hope you have a very happy, successful, awesome 2021 and beyond. And I will talk to you in the next video.